We have supported the country for 6 months now, 7 months, and it has cost us 9 billion Kenya shillings for H1. We are not in a position to say when we will go back to charging. We do know that we will go back to charging at some point. We are not in a position to announce that. When we are ready to do that, we will come back to you and announce that. We have also been closely in touch with the central bank during this period, and we are working together to make sure that we have a position that is fully aligned between ourselves and them. But as I said, I wanted to reinforce that we went with this direction to support the country during this period, to support a cashless environment, but also to cushion Kenyans during this period. Kenyans are aware it's not going to be there, the free transactions are not going to be there forever. But at this stage, we are not in a position to say when we will stop, when we will go back to charging.
Thank you, Peter. Jainesh, I believe Peter has responded to your question as well. So I will move on to Willis's question. This is regarding Ethiopia. How soon should we expect operations and revenues from Ethiopia?
Is that a question from Lynette? Did you say that?
From Willis. From Willis.
From Willis, yeah. So thank you, Willis. I should say that our intention to invest in Ethiopia is a long-term play. It's not to generate near-term revenue. Just to indicate where we are, we submitted an expression of interest some months back. We are about to submit a bid, although we are waiting for the terms to come through from the Ethiopian government, which has been delayed. We expect those, what they call ITT, which is the terms that allows us what to bid for, to come through in the next 30 days. And we are required to submit a bid within 30 to 40 days thereafter. Our intention is to go with a consortium. Safaricom will be the lead with approximately 51%. Of course, we'll be sensible in terms of the kind of bid we have in terms of returns to shareholders, our ability to fund any investment that we make. There's challenges in terms of whether mobile money will be included and what time frame that will be. However, all I can assure you is that the board will consider the overall bid in the context of ensuring that shareholder value is protected. We do not believe that dividends, ability to pay dividends will be impacted by investment in Ethiopia. But I do need to say that at this stage, we do not have a view as to, or we are not in a position in terms of the return profiles or indeed the debt levels that we'd have to put on the balance sheet to be able to navigate our way through the bid. But when that is ready, we'll be able to share. We are waiting for the ITTs for us to be able to respond. And we'll seek the relevant approvals, both in terms of the board itself and when the time comes from the regulatory authorities, but also shareholders. I'll leave it there, unless there is any further question on Ethiopia. But just one more. Ethiopia is going to be a strategic investment. As I said at the beginning, is the long-term play. We hope that even if we went in with a pure telecom license, that a mobile money license would then be allowed within a relatively short period of time, that is 2 to 3 years, which is what the government has messaged. Because long term, we believe that we will get an appropriate return if we combine a telecom operation with a mobile money operation.
Thank you, Peter. I believe that also responds to Donata's question. I think we can then move to Silha's question. Ilana, this is a follow-up on the short-term borrowings. Any detail on duration or cost of debt, please?
Yeah, thanks. Hi, Silla. I hope you can hear me. Sorry, my internet went funny there.
Yes, we can.
Yeah, so Silla, I don't think we're going to get into the details of the cost of debt. I think I mentioned it earlier, but apologies if it wasn't very clear. The debt is purely timing, so it'll be repaid within this financial year. Now, obviously, if we're successful with the bid in Ethiopia, there'll be additional debt taken on our balance sheet. But to put it in perspective, in case the question is coming from one of worry, our net debt to EBITDA ratio at H1 was 0.27, which compares very favorably. If you compare to, say, like a Vodafone, they'd operate at 3 times EBITDA. So our balance sheet is very, under leveraged, under geared from the point of view of sustainability. But the funding that we took in H1 was to facilitate kind of timing of working capital commitments and would be repaid by end of year.
Can I add to that, Ilana? I hope that shareholders and investors are not going to complain with us paying dividends early, because one of the reasons why we went for a bit of additional funding is to fund working capital for other projects, including Capex, as Ilana has mentioned, to enable us to use our free cash flows to be able to pay dividends, which we paid a few months earlier than normal. And it was a recognition of the fact that it was an unusual year. Of course, going forward, we are going to go back to the normal timing in terms of paying dividends. But certainly, if we hadn't paid dividends earlier, we would not have been constrained. So it's a purely timing issue. Is a short-term matter that should should wash itself by the end of the year, as Ilana has messaged.
Thank you, Peter. We have a question from Ali Al Nasser. He says, thanks for the call. I was under the impression that the deadline for zero rating was December 31st. Are you now suggesting that zero rating can extend beyond this deadline?
No, I'm actually not suggesting anything like that. I'm just stating that we are not in a position to make an announcement of when we will go back to charging. We do think that we will go back to charging at some point relatively soon. I do not want to commit to a date, whether that is December earlier or later. But in not committing, it doesn't mean that we think that the deadline will move beyond December. One of the things we are sensitive about, we do not want to discuss matters that we may be having in the background with the regulatory authorities at this stage. But I would not want anyone to read in us not committing to a date that we think this date will shift beyond December.
Thank you, Peter. So we have a follow-up question from Fred Tilling. Your customer churn rate has increased to above 30% from around 20% last year. Please give some insights around why this has moved up.
Yeah, the advantage of having a great team is that you can delegate some of the questions. So I will ask Sylvia Mlinge, who looks after consumer business, but also our Chief Customer Officer, to answer the question on churn.
Hello, good afternoon, good morning from wherever you're logging in. Yes, our churn did go up in H1, but that was a deliberate effort that we have put in terms of cleaning up the fraudulent registrations on our network. We had quite a bit coming through during the COVID period, and we have spent the first half of the year cleaning that up. So if you look at the underlying churn, that's within control. It's still within the 20% range, but you've taken strict measures in terms of cleaning out all the fraudulent registrations that had happened. So that has shown up. It should stabilize by the time we're exiting this quarter and we get back into the normal range of performance that we've always had in the past. So under control.
Thank you, Sylvia. So we'll move on to Sunil's question. He has 3 questions. The first one is, can you please explain the one-offs in the EBIT line? And then what trends are you seeing in the last 3 months? And finally, how should we be thinking about service revenue growth rates?
Thanks, Sunil, for the question. So the one-offs, the nature of provisions that are taken in one period that maybe then get released in another period. I'll give you an example. In last year, we took provision against a possible liability with the KRA relating to PAYE. We successfully closed the issue with them, so we released back the provision we created last year this year. I think there'll always be kind of ups and downs. It was more to call out or caution investors that we didn't want you seeing that 10.6% OPEX reduction and expecting the same in the second half of the year when we knew that part of that was being driven by one-offs that wouldn't recur. I think the other way to look at it is that there are additional one-off impacts in the period, both from the zero rating of M-PESA transactions, the increase we've seen in the bad debt provision. So the kind of, the way we looked at it was that we were, trying to find a way to cover the impact of increasing our bad debt provision. One of the ways that we did that was to try and close out on any provisions that were sitting on the balance sheet that we felt maybe could be closed and released back into the P&L, so one could offset the other. I think there was 2 other questions. What trends are you seeing in the last 3 months? I'm not entirely sure what you're referring to. If it is service revenue, so we've got the results we're looking at are up to the end of September. So we really only have October and a week of November to go on. October is looking good, as in we are continuing to see the momentum that we saw in Q2 is carrying through into H2, which is we're pleased about. I think I'll be cautioned to predict kind of service revenue growth rates to your last point. I mean, at the moment things are going quite well, but as you see across Europe, in the US, the number of cases spiking, countries across Europe going into second round lockdowns. If that was to happen in Kenya, it would impact our service revenue performance. So it's very hard to predict at this point. I think all else being equal, the kind of performance we saw in Q2 should continue, but it'd be difficult to say with surety, I think, because there's a lot of unknowns going on with COVID at the moment.
Probably, Ilana, let me, Cynthia, let me add a couple of points to what Ilana has spoken to. In terms of the data on the data business, as we said in our results announcement, we are seeing momentum. So we do expect that all the key drivers of penetration will continue. 4G coverage is improving. We are putting more 4G phones out there, and also on the fiber side, both in terms of fiber to home and fiber to business, we are seeing some momentum. So on the data side, all the indications, both in terms of days of use, the amount the MBs used or GBs used, is going in the right direction. On the voice side, we had a tough Q1. We saw a recovery in Q2. We've started going after in one-to-one marketing, and Sylvia can speak a bit briefly on that. We're giving a slightly more value. We've seen improvement in terms of number of minutes used, days of use, but also so we've seen the right trajectory in Q2. So voice is also looking reasonably stable. Voice has been affected in the past, has been under pressure. We expect that to continue to be the case, and therefore we are looking to see how we can give more value to customers in the end, but still retain, still do well on the ARPU. On M-PESA, we have seen very good underlying health of M-PESA. So customer numbers are up, transactions are up, wallet size is up, our execution is much better. We've improved the number of products out there. We are focusing on micro SME and SMEs. So once we start charging, and we do not know how volume will respond to charging, we would expect to go back to normal in terms of growth profile of M-PESA. I wouldn't want to say what that normality is, because as Ilana has said, no one knows how the second wave on COVID will affect the economy, the people. There are still very many people who are out of jobs. SMEs are affected. So we are cautiously optimistic in terms of the underlying health of our business, but we just need to continue to manage and improve execution over the period, and see where we end up. We have of course now given guidance for EBIT and Capex, and that should give you an indication of where our confidence levels are, although there's still assumptions out there that are related to the economy.
Thank you, Peter. The next question is from Delia. The presentation shows decline in disposable income through September. What is the relationship between the disposable income and Fuliza values? There appears to be no relationship between income levels and repayments, which have improved Q2 versus Q1.
Ilana, do you want to take that one, or Sitoyo?
Hi, Delia. So I think that the nature of Fuliza and the type of product it is, I suppose it in some ways ensures that the amount outstanding gets repaid, because if you have Fuliza outstanding, once money comes back into the wallet, the loan gets repaid. And maybe Sitoyo might be able to speak to this in a little bit more detail. I think Fuliza's performance has been strong, which I suppose in some ways is a reflection of the disposable income situation, and that more people have been taking Fuliza. But I think it's just testament to the setup of the product construct, such that the repayment rate has remained high. So it kind of facilitates convenience for the customer, especially in times of need like COVID. And from our side, it's a less risky kind of setup. So Toyo, I don't know if you can speak to this in a little bit more detail.
No, thanks, Ilana. And you're right. It's how Fuliza was constructed. It's contextual in nature, and this is something that customers would normally have. It helps complete a transaction a customer would normally have completed it in 2 or 3 days later. So the way it was designed, it does have low NPL. The growth is also pushed by the growth in customer numbers. It's also pushed by the growth in values and volumes. And given the scenario of COVID, which in Kenya, cash has been seen as a means of transmission, and the government has been pushing going cashless, we've seen more volumes coming in, and this has helped also Fuliza in terms of repayment, but also in terms of more money coming into M-PESA, as Ilana had mentioned, in terms of cash-ins, as well as money coming in from the bank. So that acceleration of M-PESA from volume, values, customers is helping the growth of Fuliza and also maintaining the NPLs. Thank you.
Thank you, Ilana. Thank you, Sitoyo. Next question is from Alisa, and I will also loop in Elizabeth's questions because they are very closely related. So Alisa from New Street asked that, could you talk about pricing for both voice and data services? For data year-on-year revenue growth slowed from half 20 to half 21, but we have seen an acceleration in traffic. Has competition intensified, or were there any factors at play? How should we think about data revenue trends going forward? In voice, it looks as if pricing pressure has also intensified. What is driving that and what should you think about it going forward? Elizabeth is also asking about the outlook for mobile data and fixed service for half 2.
Ilana, do you want to start the question and then hand over to Sylvia?
Sure, yeah. So I think for data, yeah, comparing to half two last year and half one this year, it does look like a slowdown in the growth rate. There has been consecutive quarter-on-quarter growth. Some of that growth rate in terms of the year-on-year is a function of the fact that in half two last year, we were lapping the effects of what we'd done in the previous year. So the high kind of 20% growth that we would have seen in half two last year is a function of what happened in the previous year. That being said, I think, you know, competition, I'll let Sylvia speak more in terms of the intensification of competition, etc. Data trends, I think we'll maybe be able to speak directionally more than specifics at this stage. You will continue to see the price per MB or the effective rate per MB come down and the effective rate per minute come down, and usage will continue to grow in data so that we can fully unlock the opportunity that's there, and for voice, I suppose, to keep it relevant and, you know, to keep the voice offering attractive. But I'll let Sylvia chip in here, maybe more on the competition part.
I think for us as an organization, the key thing we focus on, first of all, is customers. I mean, competition are free to do what it is that they want to do, but for us, the most important thing is what is happening with our customers and what are they currently going through in their lives. As Peter shared during during the presentation in the morning, you saw the impact on the consumer disposable income due to COVID. And traditionally, we have had a premium in this market, which is a strategy that we'll continue to maintain. But because we must drive affordability for our customers, because they don't have as much money as they previously had due to impacts of COVID, high levels of unemployment. We've seen a lot of businesses also closing in this market, and there's now a gradual reopening, but that impact is definitely there. And therefore, we made a deliberate choice to drive a lot more affordability for our customers. You had Peter and Ilana in the morning speak about what we have now done with our one-on-one personalized offerings that we're driving through CVM, and that has paid back for us in terms of traffic. So that's going to be a strategy that we're going to continue to deploy going into the future as we drive affordability. For data, we did take some decisions during the COVID period in terms of supporting our students with mobile data bundles that were highly subsidized from what we had before, as well as small and medium enterprises. We also took a decision on fixed data to get a lot more customers onto the service, but give them double speeds for the amount of money that they were normally paying for a normal fixed bundle. So those things obviously did have a short-term impact, but I think we are very happy to see what it's generating for us in terms of customer activity KPIs. Usage is up. If you look at it from mobile data, we are now carrying significantly higher voice traffic, which is good. FTTH paid off for us, fiber to the home, in terms of increased connections with customers coming on board. And overall, even in terms of NPS levels, we have actually seen our Net Promoter Score go up over the period. So it's the right decisions, cost us in the short term, but they've paid off for our customers. So for us, the plan is keep on focusing on our customers, what is important for them, how do we help them navigate through this period, because we believe if we earn their trust and loyalty during this season, they will remain with us for the long term. So directionally, that's where we're going with our pricing strategy.
Thank you, Ilana. Thank you, Sylvia. Our next question comes from SW. His question is, what services do you plan to offer under wealth management? What is the progress on Mali? Will you be seeking a license from CMA? Then there is a follow-up question on Fuliza. What is the growth rate and how much has been lent out? What's the average default rate?
Okay, so I'll start with the question on wealth management and the Mali product, and Sitoyo, feel free to build onto this. We would not go into too much detail here, only to say that we are exploring this area. We have developed a couple of products. We are working with the regulators to seek approval, and until that approval is given or actually obtained, we would not want to announce our intention, including the specific product on Mali, because of regulatory sensitivities before approval of a product is made. Sito, you may want to add to that, given the broader agenda you have in terms of broadening our service offering in the financial services area, subject to regulatory approval.
Thanks, Peter. I think one of the things that M-PESA has been successful on is on driving financial inclusion. So when we started in 2007, financial inclusion was at 23%. That moved to above 84%, as reported last year by Central Bank of Kenya. While the financial health of customers in Kenya has stagnated around 20%. So this is a key component of our transforming lives. So we've managed to drive financial inclusion, but financial health has remained fairly stagnant. And this is why we're looking at wealth, insurance, and providing deeper products and services that relate to savings is key in driving financial health, and so that customers are able to avoid the shocks that are there, as an example of COVID as one of them. So the reason why we're looking into wealth management, insurance, and broadening that is to deepen the savings culture and drive the financial health. So what we're looking at in wealth management is part of it. But there are certain things that we are still discussing with the regulators, both the CMA and central banks, which at this point we cannot really discuss. But it is part of our intention is to drive more products and services that drive savings. I think on the Fuliza, I think Ilan had mentioned that the NPL is about 0.4%. So, and we continue to see double-digit growth in Fuliza volumes that go through the platform.
Thank you, Sitoyo. Just on Fuliza, there is a follow-up question on that from Tracy. And her question is, I see that KCB and M-Shwari disbursements have come down despite Fuliza going up. Is it a function of cannibalization or simply the banks being more stringent on lending requirements? And also any update on Visa partnership?
If I may take that. Yeah, if I may take.
Go ahead, Joe.
For just a bit of context, when COVID started, the Central Bank of Kenya stopped listing of non-performing loans in the market for both digital as well as banking products. And this meant that KCB and NCBA, basically KCB, M-PESA, and M-Shwari, the discussion of the bank was to be more prudent during this period of time. Fuliza, given the contextual nature that we've discussed, was not so affected. So because of then, we are not listing customers then, we decided to tighten a little bit of that, but that has since now reversed, and we are seeing great repayments on both M-Shwari and KCB M-PESA. So you'll be seeing a bit of growth in that aspect.
And also on Visa, if you can update.
So on Visa, we when we announced the partnership in February to become, so we have developed some products and services that we are looking to launch. So we're just waiting for regulatory approval for those ones, and then in the next half, when we get that, then we'll be able to launch those products and services. Thank you.
Thank you, Sitoyo. We have a follow-up question from Delia. Peter, this is still on the CBK and free fees. Could you give perhaps some indication of the options that are being discussed with CBK?
Delia, I'm not in a position to give those options just because of the confidentiality involved in this matter. And generally, we do not discuss conversations with the regulator, especially on a matter like this, in the public until they are resolved, because they could go either way. However, I would say that those conversations are going well. That's the one thing I would. That's the way that I would put it at this stage.
Thank you, Peter. So our next question is from Ruhan, and also someone else in the group has a question closely related. I'll just scroll down and check who. Can you give us a sense of your assumptions for the guidance on EBIT? For example, what do you assume regarding the reintroduction of M-PESA fees, if at all, in H2? And yeah, I think I'll go down and see who else had asked a similar question. Thank you.
Yeah, in giving the guidance, and this might probably relate to some of the previous questions, is that we've assumed that at the very least we would start charging sometime in Q4.
Thank you. I think that the other question was from Donatas, and I think Donatas, your question has been responded to by Peter. So we'll move on to Henry Kabue, who's asking, kindly provide details on what year-on-year service revenue growth in H1 would have been excluding M-PESA revenue. Secondly, could you explain the decline in FTTH ARPU despite strong growth in new connections?
Yeah, thanks, Cynthia. Peter, I can take this. So excluding M-PESA revenue, service revenue grew marginally, 0.2% for the period. However, I did mention at the start of the call, voice was under pressure in Q1, as was fixed enterprise. So if I look at it on a quarter-by-quarter basis, in Q1, the business excluding M-PESA declined 0.7%, where it grew 0.7% in Q2. So similar enough to the 1% or so growth we saw that the business excluding telco performed at for full year last year. On the fibre to the home ARPU growth connections, so this is just a function of mix, Henry. So, you know, as more customers took up the offering that didn't previously have it, obviously when we started rolling out fibre to the home, we started with the demographic areas we thought would give us the best return. Once those areas were serviced to continue to gain more and more customers, the take-up seems to be largely the kind of lower value packages, the bronze package as an example, instead of say like the silver package, which is giving a mixed impact to the ARPU, which is causing the ARPU decline.
Ilana, just one more addition, Cynthia, to Ilana's answer. We did also, as part of the COVID response in Q1, we did give significantly more bandwidth to fiber to home for free to support the working from home. And Sylvia did reference some of the aspects around supporting education.
Thank you, Peter. Thank you, Ilana. So we have a follow-up question from Delia. During the strategy update this morning, Peter mentioned that partnerships and M&A would be strategic enablers. May I please ask types of M&A you have in mind, size, lines, or business?
I knew that question would come. I think that I would answer it in a broader sense. Safaricom has been extremely successful in the past 20 years, and we believe that going forward, we will need to leverage more partnerships and M&As rather than do a lot of the things ourselves. So as we go into new areas, whether that's agriculture, in health, in education, but also more broadly, even as we think about content, as we think about going into Internet of Things and other aspects of our business, we do need to leverage partnerships and M&A. So where it makes sense for us to acquire an entity to give us either speed to market or capacity, we will do that rather than wait to build. So I don't want to go into specific areas, but certainly one of the areas that you could think as an opportunity is the whole financial services area, or whether when we go into these whole digital ecosystems. And also the content area, because we don't want to build everything from scratch or take a very long time to build the assets we need to be able to win. So it is more generic, I know, but as soon as we start forming some themes in terms of the areas of interest for us, we will keep you informed.
Thank you, Peter. Our next question is from Jainesh. Excluding Ethiopia, are there any other external expansion opportunities being explored?
Yeah, from a geographical perspective, our primary focus, just so that we also maintain management effort in a specific area, our primary focus at this stage is Ethiopia. And once we are clear how that pans out, then we will discuss what other areas we should go after. But it will be a significant effort because this will be the biggest investment that Safaricom has made for a very long time. Both in terms of the stature of the country, the future revenue opportunity, but also the operational capacity that will be required for us to be able to bring it to life. So, and that's the reason why we are focusing on that. On the financial services side, as you know, we signed the JV, which is primarily a cost and innovation sharing JV with Vodacom on a 50-50 basis. We have accelerated that in terms of pooling resources, investing together so that we can create the future M-PESA from a platform perspective, but also start to accelerate and share best practice in the way we develop products. So there are some countries that are ahead on, say, insurance, say like South Africa is ahead on insurance. We will borrow some of those best practices in thinking about how we launch insurance in this market. So the JV that we have on M-PESA will help us be able to accelerate our product development innovation, but also ensure that we have the best platform into the future that can benchmark against the best globally. So those would be the two areas we are focusing on at this stage. I would ask Sitoyo to say a few words on the JV and some of the work we are doing, and also if you want to talk about anything you may want to touch on the IMT. Sitoyo.
Thanks, Peter. I think from M-PESA Africa, as you stated, it's designed to look at M-PESA as one. Kenya has been very successful as an M-PESA market, but we have 7 other markets across. So while Kenya has about 26 million customers, we have over 42 million customers, 30-day active M-PESA customers. So we are looking at leveraging our strength to build once and deploy enterprise-wide. So that helps in terms of our Capex spend, OpEx spend. We're looking at how do we leverage on our scale when we're talking about global partnerships that we want to engage in. So we're looking at state-of-the-art common platforms that we invest in, as well as giving a broad range of access to partners beyond the African border to enable both e-commerce as well as international payments and remittance. To talk about international remittance, IMT, we've seen very good growth during the last 6 months. We've seen more inflows coming into the country, and today over 50% of all inflows into Kenya terminate on M-PESA. And we've seen that being part of not only revenue, but also funding our downstream transactions on M-PESA. So international money transfer, today we have over 28 partners, such as PayPal, AliExpress, World Remit, Western Union, MoneyGram, and we continue to expand this. And for M-PESA Africa, we'll be leveraging on the strength of M-PESA to be able to bring in more partners to our market. Thank you.
Thank you, Peter. Thank you, Sitoyo. Our next question is from Samuel Njihia. On the new Pochi la Biashara feature, the business funds will not be used to offset overdraft facilities. Do you anticipate customers misusing this feature to delay making payments on Fuliza? If there's misuse, are there any measures you may implement to curb it?
Sitoyo, do you want to go for your favorite topic?
So I think this it's a great question, and it's good that we've captured Pochi La Biashara, which is our latest product, targeting, as Peter said, we're targeting SME and micro SME. Pochi La Biashara targets micro SME, and today we have 5.4 million micro SMEs within our ecosystem. And these micro SMEs do not qualify from a KYC to be able to get on merchant deal. So what we've designed is a wallet that separates the business and personal line when they receive money via P2P. When the money comes onto the Pochi or the secondary wallet, yes, this is not impacted, does not repay Fuliza, but remember this is an ecosystem. So they will be doing more transactions across the M-PESA platform, but as well as also withdrawing. And during that whole period, Fuliza will be captured. So we have mitigated any potential leakages, but we this to Peter's point, we are empowering our micro SMEs. Today, they can also sell airtime and get a commission on it. So this is the beginning of something great that we're looking at in terms of how do we empower micro SMEs in our ecosystem. Thank you.
Thank you, Sitoyo. The next question is from Delia. And we also have Tracy, who's asked a very similar question. Lipa Mdogo Mdogo was launched during this period. What is the initial take-up or demand? And then Tracy asked, how many devices have been released under the 4G subsidized handset program? What is the average usage for these customers?
Thank you. A great question. I'll ask Sylvia to talk about that one.
Okay, thank you. And thank you for remembering that we launched Lipa Mdogo Mdogo towards the end of May. So yes, very excited about the result that we're seeing coming out of this. We had said that we were going to use the first quarter to test what would the customer behavior be in terms of take-up, but also in terms of the repayments that we would be seeing coming through, and the change in terms of their usage profile. Remember, we were targeting predominantly 2G users, getting them to move directly to 4G, because as you probably know, if you look at the profile of the handsets on our network, about almost 50% of our customers are still using 2G phones. So a big opportunity to be able to move those customers to 4G as we have continued to accelerate the network coverage. So good, encouraging early results. Now we want to scale up using our dealer network because we were only initially offering this through the retail channel. We have just probably about 50,000 customers who've already taken it up. We can see upwards of about 30% increase in ARPU on their data usage from 2G to 4G, which is also very encouraging. And now we want to really ramp up by leveraging our dealer infrastructure. We have over 2,000 dealer points across the country to be able now to offer these to our customers. The NPL performance has also been good and very much performing within the business case expectations that we had set. So that is also going well. When we look at the overall 4G devices attachment on the network, also growing well in line with plan. There's what we drive through the sales that we do through our retail shops, but there's also what is driven across by the retail market. And that's why it's important for us as an organization to shape the profile of the devices that are being pushed in the market. When we focus on pushing 4G devices, we also see the open market also pushing the same. And therefore, we have seen an increment of over 1 million smartphones that have been added onto our network since we came into this year, just simply by focusing on working with the open market to ensure that we are adding a lot more LTE phones on the network. So that is good for us. We're excited about that, and we'll continue to push that into the second half of this year.
Thank you, Sylvia. Our next question comes from Luis Pile. Please, can you give more color on your increase in IT Capex spend? Your current guidance implies a step down in Capex intensity in half 2 relative to half 1. Also, please provide an update on how you're managing the network demands and related network OPEX.
Ilana, do you want to talk about Capex?
Yeah. Hi, Louise. Thanks for the question. So The IT related spend relates to things like biometrics, voice biometrics, upgraded dealer, pinless vending portal, increased kind of capacity and functionality on our various databases. And the one I called out this morning, I'm relating to M-PESA and the M-PESA platform, which makes it easier, to launch new products and easier to integrate APIs. Capex intensity for H2, yes, is expected to drop versus H1. We took the decision to accelerate our capital expenditure in H1 to support, I suppose, top line growth. We felt it was best to do what we could to support the growth, given we knew it would be under significant pressure. And then your last question, network operating expenses. So our network OPEX is in good control. We're showing a saving year on year in H1. So it's in good control at this point.
Thank you, Ilana. Our next question is from Jake. Jake, I believe the question on guidance has been responded to by Peter. But for any further details, you can reach out to us directly. I think I will move on to Soji's question. Soji is asking, what are your updated strategic thoughts on M-PESA rollout into the markets, and what should we expect from M-PESA over the next 3 to 5 years? Any possibility of spinning off this business and listing it separately?
Can I ask Sito to answer the question? I can answer the question about spinning, but Sito, can you talk about what we are thinking in terms of broadening M-PESA? So
M-PESA Africa, as I mentioned earlier, is designed to look at M-PESA as one unified platform. And what we're looking at, while Kenya is ahead in terms of products and services and also the platform, other markets are not at par with Kenya. So we've got a big opportunity to accelerate those markets, but as well as accelerate Kenya in terms of the new innovations that are coming on board. Peter had said the M-PESA Africa is almost like a cost center. So Safaricom and Vodacom are investing more capex into M-PESA Africa to accelerate Safaricom as well as accelerate the other markets. In terms of any other opportunity that we may see beyond the markets that we have, those will be evaluated, and if there's any attractive market, then I'm sure Peter and the board will be guiding on that. But in terms of M-PESA Africa, as I said, is to strengthen M-PESA, have common platforms, build ones, deploy enterprise-wide. Thank you.
Yeah, Sito, could you speak a little bit more about just becoming a financial services provider in Kenya?
Thank you, Peter. I think as we move into more credit propositions, savings propositions, we're looking at broadening our financial services portfolio into areas on wealth management, insurance, and then deeper products and services for our SME and our micro SMEs. So when you look at, as an example, in our merchant solutions, which we have over 200,000 active merchants, we are providing capacity planning for them and support. We are looking at providing better products and services from the transacting till business app and putting this all under the SME platform. And then we're looking at how do we empower them by providing them with working capital going forward. So from an SME standpoint, from a financial services, broader financial services provider, we're looking at that. The second bit in it on the pillar is also looking at M-PESA as a super app, and we are working to build. If you've seen what Alipay have done, it's the same concept we're looking at, and putting M-PESA as a super app for both merchants as well as for the consumer side of it. The third part of it is also looking at how our open API strategy is in terms of enabling opening up our APIs more. Today we have over 28,000 developers on our platform. we're looking at having a more open API to encourage more partnerships, as well as leveraging on partnerships such as Visa and so on. Then the fourth part of it is on our technology infrastructure, ensuring that it is fit for growth, that it is scalable, it's secure. We are putting active sites, microservices, and it's cloud ready, so that we are able to take advantage of all the opportunities that come with regard to be a fully fledged financial services provider. Thank you, Peter.
Thank you, Sto. And just to reinforce, I know you probably heard me say that in the last quarter when we interacted with you, that M-PESA has been primarily focused on individual customers. The reorienting of M-PESA into the enterprise piece, especially micro and SMEs, has a huge headroom for growth. And we've seen it during COVID, that SMEs play such a central role to how our economy operates, to the level of employment. So even in terms of empowering the country, we can do a lot more by just ensuring that we are much more specific and focus on innovation that empower SMEs. So of course, on the personal side, we will continue to push the boundaries, but you will see a lot more focus on SMEs and micro SMEs. In terms of whether we would intend to spin M-PESA as a separate business, from a structural perspective, that's something that we will continue to review as the business evolves, as Safaricom evolves. We continue to review which is the most optimal structure, corporate structure that we should have, and shareholding structure. And as we bring in more partnerships and potential M&As, we may consider other structural options, the organization-wide, that would make more sense. I do not want to say too early what we will do with M-PESA, but as you know, as you have seen from our strategy, it is about focusing on broadening it to be a financial services provider. How that eventually shows up in the structure, we will come back to you at an appropriate time.
Thank you, Peter. It's 5:01 or 5:02 Kenyan time. We still have a couple of more questions to go. I don't know how you'd like to carry this forward. If there is no more time, we can always respond to them.
We should take those that have already been put on the board.
Sure. Okay. So I'll just very quickly move on to Sunil's question. Will the company contemplate a cut in M-PESA fees from previous levels to retain their volumes?
Yeah, it's a great question, and actually it's an interesting one that we are considering. But we would want to see how consumers respond to volume before we make a significant judgment on that. But it is something that we are looking at, and we would intend to reduce our cost. I mean our transaction cost over time. How quickly we do that is something that we need to judge, but certainly directionally, we would want that to be the case. But we haven't made a decision yet at this stage.
Thank you, Peter. The next question is from Fred and Philippe. They're both asking about FTTH. Fred asks, says you have made very good progress in the FTTH market. Can you provide some idea what you view as the target market in terms of number of homes in this segment? And then Philippe's question is closely related. What size do you expect for FTTH business as a percentage of service revenue in, say, 5 years? And what is the Capex intensity for this business currently in the long term?
Sylvia, please feel free. Can you still hear me?
Yes, we can hear you.
Yeah.
During our 20th anniversary celebrations, Peter did announce that we have a big ambition around FTTH and delivering fiber to homes. I think we are very clear that the way people work going into the future will dramatically change due to what we have seen with COVID. a lot of people want to work from home, or they at least want to have the option of remote working. And therefore that presents for us a big opportunity in the area of delivering broadband connectivity to homes. So we are focusing on that. And from a strategic perspective, the ambition is to ensure we cover 1 million homes with our fiber connectivity within the next 5 years. So we are going to be resourcing for that. I'll let Ilana speak to the Capex intensity for the same. But even from a consumer perspective, the way we look at this is, while not every home may be covered by a fiber connection, there's also a big opportunity for us to be able to leverage the wide and extensive 4G network to deliver a 4G wireless solution as a last mile connectivity option, which then enables us to be able to scale and reach a broader base of customers. And therefore that means that we are looking at people who are young adults who are working from home, or people who are also running their own enterprises, small businesses, and are looking to see how can I be able to do that from the comfort of my home. So a broader base of customers from what we have traditionally had in the past, which is exciting because it means the demand is there. But the challenge for us that we have to figure out is, how do we do this in a way that is scalable and also in a way that is affordable, so that we do not then increase the costs to the end users in line with the affordability maxim that I spoke about too earlier. Ilana, if you could take the question on Capex intensity.
Yeah, thank you, Sylvia. So fiber to the home Capex intensity is not something we track. The biggest reason for this is, so we were investing in our fiber network for redundancy purposes. The fiber to the home part is like our way of trying to sweat that asset, or like monetize it further by then connecting it to home. So the fiber wasn't laid specifically, not all of it, for connecting homes. It was laid for redundancy, and we connected homes then to it to increase monetization. So for that reason, we don't track Capex intensity on that specific revenue line.
Thank you, Ilana. Thank you, Sylvia.
Can I just make one additional point, just to say that given that home and just generally what Sylvia describes as fixed, whether that's home, fiber to home and fiber to business, will become a lot more important. We will pay a lot more attention in terms of both the way we invest, but also the way we service customers, the customer onboarding process, the way we service them, and the level of automation, because at the moment, as you know, our business was primarily focused on mobile. And that's why we do not set targets as to what contribution home or fixed will have in the future, but just to say there's a significant opportunity that can complement our mobile business, but also that we allow customers to feel that they have a home connection, but it's kind of an always on connection, whether they're at home or on the go or in the office. So we will be putting a lot more structure around that in terms of how we manage that business in a more focused way than potentially we've done in the past.
Thank you, Peter. Delia, please allow us to get back to you on email on your M-PESA question. Jainesh asks, the 6% decline in OPEX, is that predominantly due to COVID? How should we look at OPEX growth?
Do you want to take it, Peter, or you want me to? Okay. So thanks, Jainesh.
You would expect that I would want you to respond to that.
Yeah, that's fine. I thought you were going to answer. So yeah, Jainesh, thanks for that. So predominantly due to a decline in COVID. So yeah, we've seen some OPEX savings as a result of COVID, travel as an example, offsite meetings, conferences, etc. But we've also seen an increase from the point of view of PPE equipment for frontline staff, facilitating work to home, etc. We've also made some decisions in terms of prioritizing spend for the year. We're obviously conscious of the fact that P&L is under some pressure. So publicity expenses, as an example, you can see a decline year on year. Now, some of those savings, I think, will probably stay with us in future periods as we look to ways to digitize more. For example, our route to consumer versus the way we had been doing it. If you're asking in terms of how you should think about OPEX for this financial year, I'd say half one is on an underlying basis is a fairly good guide. For next year and the years that follow that, I think we'll see some OPEX growth, but you'll see continued OPEX intensity reduction, because we do need to fund the new revenue streams, as Peter called out regarding our strategy. Health, agriculture, expanding into newer verticals is very much part of our strategy. That does require some resources to be put behind it to really ensure that it comes to fruition and we can really safeguard the future sustainability of the business. So from a longer term perspective, expect to see OPEX growth, but a reducing OPEX intensity.
Thank you, Ilana. Jacqueline asks, please speak to what guided the investment in Circle Gas, sorry.
Circle Gas, yeah.
So I just a very brief reason why we invested in Circle Gas. Circle Gas, as you know, and through Circle Gas, they control a company called M-Gas here in this country. It is to avail LPG gas on a pay-as-you-go basis for families that struggle or for households that struggle to cook with the right type of cooking. So they might use firewood, or they might use the environmentally kind of dirty fuel, so to say, kerosene and so on and so forth. So Circle Gas allows us to get into an area that is very similar to some of the ways that we have transformed lives in the past, and enable households to be better, and also to use a more friendly, environmentally, a more friendly kind of cooking method. The initial response so far has been very good. The partnership with we hold less than 20% shareholding, but we are learning a lot about those customers, and through that learning, we can be able to innovate. As you know, that is also using IoT, Internet of Things, which is an area that which is a platform that we want to utilize to enable better ways of operating business, operation, and so on and so forth. So it is in line with our intent to transform lives, and also it's a big opportunity given the number of people in this country who would be eligible to use this kind of method into the future. So that's the reason why we've gotten into it, and it's a very exciting area, and we'll keep you informed on how it goes.
Thank you, Peter. Willis asked, on an SMS and M-PESA revenues, what is your projected gaming revenues? Do you anticipate any increase in revenue, especially with the anticipation of re-entry of SpotPesa?
Thanks, Willis, for the question. So betting revenues, from the point of view of total M-PESA revenues, about 4% of the total currently. From the point of view of SMS, the lion's share of it comes through something that we class as bulk SMS, which doesn't sit within the messaging line. It sits within other service revenue. In terms of its overall contribution, from our point of view, betting is not something that we actively track or target, as a means to increase revenue, be it in M-PESA or in SMS. We were, I suppose, the beneficiaries of the payment method of choice for betting when it really took off in Kenya a few years ago. And since its decline, we've always kind of messaged that our view is it was never really a sustainable revenue stream, such that it didn't form part of our targets in terms of trying to drive it further. So if something happens with SpotPesa and we happen to be the beneficiaries of it, then well and good, but it's not something that we would factor into our own internal targets. And something that potentially impacts the economy will ultimately be an impact to us. It's not an area that we drive or try to follow. Peter Satoyo, I don't know if you want to add anything on to that.
I think, Ilan, from my side, you've captured it.
Yeah, same here.
Thank you, Ilana. So the next question is from Kishan, and I'll group that with Sruti's question. Is Safaricom planning any announcements on 5G in the near future? What are your thoughts on possible 5G spectrum costs in Kenya? And then Shruti asks, says, congratulations on 20 years. We are seeing some operators across SSA selling their towers. What is Safaricom's strategy here?
On 5G, it's a question that I was asked by the media earlier this morning. And my response is that there is still so much headroom for us to exploit and fully utilize 4G, even before we go into 5G. Of course, 5G has relevance in this country and will be part of our plan for being a purpose-led technology company over the next 5 years. So we will go into 5G. We've tested it in this country. We will go through the conversations around spectrum with government in the background. But in terms of immediacy, we are not intending at this stage to go big on 5G in the near term, but it will be part of our five-year strategy. Steve, and I wouldn't want to go into the delicate issue about spectrum fee levels for 5G, because that has not been determined, but I'll leave it to you to, if there's anything you want to say on that front.
Okay, the pricing of spectrum in Kenya has been very predictable, and it tends to happen through a direct pricing methodology by the regulator. We don't go through auctions and such, which tends to push up the cost of frequency for operators. The administrative pricing methodology that has been used in the past has ensured that the highest costing spectrum band has been $25 million. So we know, we suspect that a similar methodology might be applied when the regulator is ready with 5G. And at that time, we shall have the discussion. But I wouldn't want to go beyond that. What I would rather say is we're also very grateful to the regulators for their support during this COVID period, when they have made additional resources available to ourselves to be able to carry the capacity that we've seen increasing during this COVID period.
Yeah, Steve, I agree with you. I want just to reinforce what Steve has said in terms of support. We've had a very positive working relationship with the Communication Authority, with the ICT Ministry, and also generally in the industry in terms of support during this period with additional spectrum. We've had to carry a lot more capacity, both on our voice, but also data in particular. So we are very grateful by the partnership that we've seen from the regulatory authorities in terms of during in supporting us during this period, and we hope. And we do know that this will continue going forward.
Thank you, Peter.
Cynthia, we had intended not to, because we are 18 past the hour, so unless there are some burning questions, I think we do need to bring the call at some point, just to respect everyone's time.
Yeah, sure. I think there's one.
Yeah, yeah. Go ahead.
Sorry, the last question is actually from Sunil. Can you please comment on the network vendor strategy? What are you seeing in terms of pricing environment? And if there's anything you would highlight? I think that is our final question for the day, Peter.
And just Sunil, if I'm not sure I understand, unless someone, Ilana, if you understand the question. Vendor strategy, I'm not sure I understand the question on the network side. Steve, do you understand the question?
I can only assume it's relating to Huawei versus, Steve.
I thought about it along those lines as well. And Ilana, this should be up your street in terms of who we rely on as our main suppliers.
Yeah, so in terms of our network vendor strategy, we're predominantly Huawei. We're not 100% Huawei. We do have a dual vendor network. In terms of any particular changes to that, Peter, maybe I'll let you comment. Not aware of it in terms of pricing environment. Anything that we'd highlight? No, I'm not entirely clear on the nature of the question, so I think I'm trying to read between the lines, but I suspect it's relating to like Huawei versus other providers.
Yeah, we do have a policy of having two big suppliers, just so that we do not rely on one. In terms of pricing, we have continued to demand more value from our supplier base, and we've seen that in terms of being able to get more value. We are also sensitive because we have reframed the way we think about technology, so that we are investing a lot more on the IT. The proportion of IT has increased, which is important, especially with the M-PESA, but also data centers and so on and so forth. The IT infrastructure is important, but nothing major has changed with respect to our vendor strategy or major pricing changes. We are much more. We have started as part, and you'll have seen from our strategic pillar number 4, which is we want to be a cost leader in the future, and of course Capex and smart investment becomes part of that cost leadership. So we will put a lot more scrutiny in terms of the way we source, and of course Capex is a significant part of our sourcing every year. So you can expect it is more from a proactive approach rather than because there had been a major change in terms of our vendor strategy.
Salome, we will get back to you on email. Other than that, Peter, thank you very much for the additional time that you and the entire EXCO team have given us. I think that is it from our end, unless you have any closing remarks.
So it is just to thank everyone who has been on this call. I have great questions that we have received, and our team and myself and our teams are ready to provide any additional input. As you know, it's a tough time. It's an uncertain time. We've seen signs of a second wave. We are encouraged by where our business is in terms of health, and also in particular some of the recovery that we have seen in Q2. Our intention is to continue to push the boundaries around execution, and you'll have seen our new strategy. So start to execute based on those key 4 pillars, but also focus on the strategic enablers. So I will end it there, and thank you for a great call. And if there's any further feedback you want from us, very, very happy to receive the emails. Thank you very much, and have a great afternoon or a great day, depending on where you are. Thank you very much.
Safaricom.